line for that to find out what is in fact lying ahead in the real estate market over in China. Let's get straight out to Hong Kong. We've got Micah Klibaner, Regional Director, Head of Research, Greater China at Jones Lang LaSalle, joining us right there on set. So, Michael, Vanke numbers are actually looking not bad. In fact, Q1 net profit looking up, and their sales were looking decent as well, although gross margins a little bit under pressure. But still, demand looks quite strong. Why is the market reacting the way it is?
Right. So one of the concerns is the outlook. And the outlook, I think, is for growth to slow down. Transaction volumes have probably peaked here with policy risks getting more onerous. I think March was an extraordinary month from the policy announcement at the beginning of the month to the implementation guidelines at the local level at the end of the month. In between, you had a whole lot of people trying to front run the implementation of those policies. So you had buyers who were eager to take advantage of a hot market. You had sellers in the secondary market who wanted to get rid of their properties before the capital gains tax came in. And you had developers who were keen to unload luxury and high-end projects before the price caps came in. So lots of activity in March that drew demand forward. I think for the second quarter, we would expect transaction volumes certainly to be off. I think for us, the big concern is what happens with price from here, because price will tell you everything you need to know about the outlook for policy.
But time and time again, prices continue just to tick up, suggesting that there is strong, resilient underlying demand as hundreds of thousands and millions just keep on joining the middle income bracket. You don't see that happening.
Well, right. I mean, this is the difference between the sort of medium-term outlook and the short-term outlook. In the short term, the concern is certainly what we saw in the GDP numbers about income growth. That was a disappointment. And in terms of policy having a direct effect on what's happening in the market. But you're absolutely right. And this is why we still don't believe China is a bubble. Policy's been very effective. In the last 2.5 years, prices are basically flat. In the last 4 or 5 months, they've been rising a little bit because implementation's getting a bit soft. But we think from here, price action actually calms down. We think we're unlikely to see continued rises in prices in April. We think that probably takes some of the policy pressure off of the central government, and for that reason, probably the outlook for the shares may be a bit overdone here. If you remove some of that, some of that policy risk, then maybe the shares are overdone.
But one thing I don't understand is, regardless of whatever 1, 2, 3 punches that the Chinese government rolls out, we see buyers even opting for quickie divorces to get around the rules, and so prices and volume levels have remained pretty stable. Yeah. Do you think they will do another sturdy round of tightening?
Right. So this is what I think is really interesting about the policy announcements at the beginning of March from the new leadership. What they said in their new 5 measures recognizes the loopholes in how policy is currently being administered in terms of things like divorces, in terms of forged documents, in terms of home purchase restrictions being implemented in certain districts but not cities as a whole. This gives these central government policymakers the room to ratchet up implementation if they need to. At this point, we think the outlook for prices is stable, and therefore they don't need to turn that dial up. But if they saw prices starting to run away again, they certainly have the ability to increase implementation to address some of these loopholes. And that was what was new in the beginning of March compared to the previous administration's policies.
Yeah, certainly a lot of concern about the health of the real estate sector. And given that a lot of people just don't know where to put their money in China, I've got to leave it there. Thank you so much. Nice to talk to you today. Michael Klibaner from Jones Lang LaSalle telling us his thoughts about the Chinese property market.